Get the latest on what's going on this earnings season, meets, beats, and more in Zach's Earnings Scorecard.
Hey everyone, Eric Dutram here for Zacks.com, coming to you with the latest earnings news and analysis. This week we're looking at three stocks that had decent reports, but actually saw their shares fall pretty badly on the week. Three very popular companies too. We're looking at FitBit, Tesla, and Priceline.com. Let's take a look at the charts. First up, we've got FitBit. Now, this company actually had a pretty great report, and we can see in their latest chart that the company has actually beaten estimates in each of the last 4 quarters. Shares were down pretty poorly coming into this number, but we can see that we saw a nice earnings beat for FitBit. Now, the shares actually beat estimates by 175%, beat revenues by 13%, but shares were down about 20% after their results, and this was largely thanks to some weak guidance numbers for Q2. Investors thought that some of the issues with costs were going to really impact the stock going forward in the next couple weeks and months, but FitBit actually did reiterate their full-year guidance and revenue guidance as well, and the stock was actually looking more promising for the full year. However, a lot of investors have a very short-term mentality, and that's why we saw FitBit shares really plunge after this latest report. In terms of their upcoming estimates, we can see that FitBit actually has some interesting numbers in terms of the current quarter and full year estimates. For current quarter, we're seeing analysts really lower some of their most recent estimates on the stock, but the current year, not so much. Actually, the most recent estimates here have been a little bit higher. So there's a little bit of promise for FitBit in the longer term, but this current quarter is looking pretty dicey, and certainly the past week has been downright brutal. Shares are down more than 25% in the last 5 days. So not a good stretch for FitBit, but those with the longer term have a much better outlook. A lot of their products have been selling well, and the company does look to have a much brighter future if you can get through this very significant rough patch. Up next, we have Tesla, and this has definitely been an investor favorite for quite some time. Shares have been moving quite a bit here over the past couple weeks and months, and investors were really focused in on the company's Model 3 product. As we can see in their chart, the company doesn't exactly have a great track record when it comes to earnings season. It actually missed in their most recent report, and that makes it 3 straight misses for Tesla. The miss was actually 58% overall, although Tesla did beat on revenues. However, as we can see, Tesla also had a bad reaction to the report. Shares were down about 8% following their news, and this was really thanks to almost too high guidance for Tesla. The company promised to get 500,000 cars out the door in 2018, which is 2 years quicker than initially promised. Now, this might sound like a great thing to a lot of investors, but there's a lot of speculation if Tesla can actually live up to these lofty expectations. Analysts don't really seem to like the story so far. We can see a lot of cuts to Tesla's earnings estimates coming forward. We can see that the current quarter estimate has really plunged. It's down to -9 cents for our BNRI metric. That's before non-recurring items. And then the current year, a huge decline from the current estimate of a 27-cent per share loss down to a most accurate estimate, the most recent estimate of $1.41 in losses. Similar trend we can see for next year as well. 42 cents was the earlier number, and now we're down to a loss of about $2 a share. So, once again, Tesla's really this long-term story, and as we can see, a lot of these numbers don't look very promising for the near term. Elon Musk and company have really been able to spin the story, and Tesla's been a great investment for a couple of years here, but it's really going to be about living up to these lofty expectations when it comes to car production and the like. It's really going to be a test for the company. It's a Zacks rank 3 right now, but some of these recent estimates suggest it could dip down into sell territory. The stock was definitely hit as of late on these recent numbers. And last up, just want to take a quick look at Priceline as well. This online travel stock is definitely one to watch for investors. It's been a popular stock as well. If we look to some of the recent charts, we can see that it actually has a pretty great track record in earnings season. No misses in the last 5 years when it comes to earnings, and we can see a nice trend in terms of the shares. It's up around $1,200 a share. Not sure why they don't do a stock split, but maybe we'll see that soon from investors. And as you can see in this most recent numbers, the company actually did beat earnings, but the shares did fall. So once again, investors might be wondering, hey, what happened here with Priceline? Well, the company did have some issues with their CEO. He had to retire due to some issues there. So it's kind of a scandal, actually. The company is actually a Zacks rank 4 right now, And the main issue here for Priceline is they do a lot of international sales, and so some of their bookings are going to be impacted by currency issues, and the company actually reduced their revenue guidance for the coming quarter. Investors didn't like that, and we saw shares plunge here following the release of the numbers. We can see some of the most recent estimates have actually been a bit lower for Priceline as well, and the current quarter and the current year estimates are a bit lower. We can see the earnings ESP is negative for both of these numbers. So it's not something investors want to see, and especially when you combine it with this Zacks rank number 4. So, not a great trend overall for any of these companies. We can see that over the last 5 days, it's really been a brutal stretch. If we compare them to the S&P 500, we can see FitBit is this blue line. It's been the worst performer by far, but Tesla and Priceline have also been weaker than the market, although it hasn't been a great 5-day stretch for the market either. All three are significantly lower than the market here over the past 5 days. FitBit is a Zacks rank number 2 right now. Tesla's a number 3, and Priceline is a number 4. All three were really victims of guidance more than anything. It really wasn't much of an earnings story with any of the three. It's kind of this future outlook. For FitBit and Priceline, it was a bit too low, and actually for Tesla, it was too high. None of them were just right for investors, so that's why we saw all three really plunge over the last 5 days. Well, that's all the time we have for this week. Tune in next week for some more information on earnings, and make sure to sign up on our YouTube channel for more information, and go on over to Zacks.com if you're not there already. For Zacks.com, I'm Eric Dutram.